Good afternoon, everyone. A very warm welcome to all of you. My name is Sunny Mirchandani. I am delighted to be your host for today's webinar on Bonds Express, which is an India Bonds investor education initiative. We at India Bonds is on a quest to make bond industry more accessible and transparent in India. And one of the ways to do so is by conducting investor education and corporate webinars, which we simplify the bond market for you and also engage with some of the most distinguished leaders in the industry. In today's webinar, we interact with the management of 361 Prime Limited, a wholly owned subsidiary of 361 Wealth, earlier known as IFL Wealth. The company is a lending vehicle of 361 Group. Now, without any further delay, let me introduce you to today's speakers. Today, we have three speakers from the management of 360. Mr. Himanshu Jain, who is the CEO and whole-time director. He is currently heading the NBFC arm, business backed by his domain experience and business development focus. He has over 2 decades of work experience across capital markets, wealth management, and lending business. Mr. Himanshu earned his master's in finance and control, banking, capital markets, and portfolio management, as well as corporate finance from Institute of Finance and Management, IFM. He's earlier been associated with organizations such as Morgan Stanley, DSP Merrill Lynch, Citibank, and BNP Paribas. Welcome, Mr. Himanshu Jain, sir. We have Miss Charu Kalita ji, Head of Treasury and Fixed Income Trading. She has over 16 years of experience in financial markets in end-to-end capital management and treasury management, some of the largest corporates, housing finance, NBFCs in India. She's been associated with the groups like Pyramid Group, L&T Finance Treasury Limited, and L&T Limited Treasury Group. Later on, she moved on to the Wipro Treasury, where she had investments and forex, managing a USD 3 billion forex book and close to 4 billion of investment book.
Thank you so much, everyone, for joining on our second tranche of the public issue of NCD, where we are raising 500 crores with a base case of about 100 crores and a green shoe of 400 crores. The issue is opening tomorrow, and it is getting first come first serve basis. Idea is twofold. One, we will touch upon in terms of what the 361 Prime NBFC is all about, the business scope, the overall risk norms, the credit protocols, the way we have integrated technology, how exactly we've been subset of the overall wealth business. So we will run you through in terms of a brief introduction. Second portion would be about IPO in terms of we'll talk about the time, the yields, the different tenor as well, and the way and modus operandi to subscribe the same. And post that, if there are any queries, happy to take them as well. So quick about this offering. Most of you are aware that we filed umbrella in prospectus in December 23. January 24, we opened our the first tranche for 1,000 crores. So it was with a base case of 200 crores and oversubscription to retain, which is green shoe option of 800 crores. So we raised 1,000 crores in month of January. The issue got subscribed within the first few hours of launch, and almost 4,000 plus clients, they participated towards the subscription. The offering got listed on WDM of Bombay Stock Exchange, and since then it's been traded. Now this is the second tranche for which today we all are on the screen and talking about in terms of our journey. Those who heard us, we talked about our 9 monthly performance then, and today we'll talk about the entire financial year. And idea is in terms of taking you through, even with the proceeds of 1,000 crores, what we raised and how exactly that has given the growth momentum that will be getting captured and reflected in numbers as well. So 361, which is our parent, is a listco, which is listed on BSE and NSE with a market cap of about 25,000 odd crores. It is the largest wealth management firm with asset under management of about 450,000 crores. It's been in inception for last 16 years as well. Two founders, two gentlemen, Karan and Yatin, started this business together. And, like any startup, they had their own set of initial teething issues for about 3-4 years. And since then this is just one-way growth street. And today, all the hard work which has been put in over the period of 10, 15 years has resulted into that we have about 28 locations with 5 offshore locations. We have about 200 plus bankers, those who cover almost 10,000 families in the country. And in terms of our payout track record, we've been paying almost third of our profits as dividend. And the idea is to give a steady income to those equity investors, those who are with us. If you look at in terms of our cap table, almost 25% is with Bain Capital, which is the largest private equity firm, followed by Capital, which holds about roughly about 14%. Then there are a whole host of institution mutual funds, FIs. So we have Rimco, we have Norges Bank, we have iPro, we have Franklin, uh, and the list is long. So altogether, they hold little about 65 odd percent. Founders, promoters hold about 15 odd percent, and rest is public float. So that's about brief about IFL Wealth 361 Wealth Management. 361 Prime is a subset of the Listco, which is also a holding company. And idea is clients, those who have lending requirement, where they have any mismatch in cash flows for a short term, they come to this NBFC platform and they seek borrowing facility. This entire borrowing is against the wealth management portfolio or high quality real estate. That's what we lend against, and a small portion against unsecured loans as well, that we will touch upon. So in aggregate, all this entire business is 9 years old. This started 2015, 2016, it got operationalized. And since then, we've been maintaining our zero NPA track record. And also, we don't carry or we don't have any open litigation from any clients. Idea is whatever we do, we try to be tight and of high quality, be it client onboarding or be it in terms of the collateral against which we lend. And if you look at our AUM, we've been on a steady growth path. We started little under about 4,000 crores, which is about 2 years back. And today, as we speak, we are over about 6,300 crores. In terms of net worth, we are very well capitalized. We have a net worth of about little under 1,500 odd crores. Our capital adequacy ratio is about 20%, which means we have enough room to grow and to borrow as well. Our PAT for the year was about 270 crores, where we are maintaining a very, very steady growth. If you look at our rating, for the last 5 years, we've been maintaining our AA from CRISIL with a stable outlook. And the average maturity of our loan book is about 6 to 9 months. And most of our liability, what we have now contracting, these are all medium to long term in nature that we'll touch upon in subsequent slide. So this is quickly about the product line. So whatever we position to our clients from a wealth management standpoint, that is direct equity or high quality of bond and NCDs or alternative asset class or for matter properties. This is all being considered as underlying collateral. Today, almost 85% of our business is against highly liquid collateral, both in terms of what the asset class that I have narrated. About 5-7% is against tier one city grade A commercial or residential apartments, and balance about 10 odd percent would be unsecured loan. And the process of onboarding unsecured loan is fairly stringent. We look at the wealth relationship, we look at clients' net worth, we look at clients' standing, we look at in terms of CIBIL scores, we look at the proper end use of the same. And it is quite heartening to share with all of you that till date we have not lost even a rupee across all the product classes that we offer our loan facility. These all loans are offered, through lien marking or through creation of perfect pledge, and where clients they come with their portfolio or property. the proper diligence is being carried out, the KYC is being done, and a facility which is being assigned basis the asset class. Typically, what we have seen basis the underlying portfolio, we have about 2.5 times collateral. So against a loan book of about 6,200 odd crores, we have about 15,000 crore plus of assets as underlined from our set of clients. We have about 800 clients which have been KYC'd, of which about 350 as active set of clients. Important. This is how our positioning is. 361 Prime, as we said, it's our lending vehicle within 361 group. Idea is that with all the client, those who have any funding needs from a wealth management point of view, it's somewhere in-house only. Everything will be taken care of. And bankers, the wealth bankers, typically they go out, and if they see any client requirements, they come back and they share those leads to the NBFC team, and in turn NBFC team takes over those relationship. And from KYC till onboarding, till collateral management, till accounting, loan accounting, collection of interest, and collection of outstanding, everything the NBFC team takes care of it. So it's a very, very thriving culture, well-established practice, how exactly processes are well-defined, how exactly a loan to be onboarded. And all 200 bankers, they've been actively reaching out to clients and pitching for a loan proposition. We've already spoken about our loan book. As we have said, since nine years from the start of the business, we have not lost a rupee. And we take a lot of pride and also too much of responsibility on our shoulder to maintain the same track record, which is not easy because we've been consistently growing our loan book between 20-25%. And idea is, the kind of scrutiny that we have to continue doing it's at times it's extremely hard to maintain these standards, but that's what our journey is all about, and we are super confident that we'll maintain the same track record. A lot to do for any financial services, in particular to NBFC business, is the quality of people, those who are running the show. Each one of them, the team members, they all have 15-year plus of experience, relevant experience within the NBFC space and domain expertise. All have been widely exposed across institutions, both multinational and Indian large firms. So it's a very, very stable team. The core team is in place from day one of business. We hardly had any attrition at an employee level. And that talks about that this entire system and the set of people, they know each and every relationship, and also they know the overall underlying collateral and how exactly the conduct of client in the past. So these all factors, they help us in terms of maintaining a good momentum on the loan book and also making sure that risk management is in place. Lastly, in this slide, Sunny, just if you can go back, please, is the risk management system, which is fully integrated with loan management system. So everything, the entire technology is homegrown. We have built everything organically over a period of time. And today, from client onboarding to KYC to the collateral which is getting posted to making sure and see client's portfolio on real time, everything can be done on loan management system. And this is very unique to our business. So just for everybody's consumption, in case of any volatility in the market, say for example, for some reason, if market is on downside and there is a steep, depletion of the overall, prices on the stock market, the same can be reflected in individual clients' portfolio for which they have pledged particular security by just push of a button. So idea is whatever, say for example, at 12:45 today, whatever client posted those collateral, we can have a valuation done at 12:50, and at 3:30 end of the day, whatever the same securities can be refreshed basis 3:30 valuation at 3:35 p.m. This is the kind of the technology. This is the kind of loan management system which has been built over a period of time. And in fact, this is something so unique to our model, and that has helped in terms of making sure that even during extreme market volatility, we've been in top of the situation, considering all the data that we have coming out of system. Sunny? In terms of numbers, this is just on the if you look at on the right top side, the AUM, the loan AUM, which is the loan book, which is growing on a steady basis from 4,000 crores to about 5,000 crores in 23. And this year we ended at about 6,200, 300 levels. And this is consistent asset gathering at our end, and also running it profitability. So if you look at in terms of yields on our loan, which is consistently growing from about 10 below 11 to now 12 quarter. And idea is that this reflects overall the cost of funding as well, which we all know that in last, let's say, 18 months or so, the overall yield curve has moved. And in turn, that has made our cost expensive as well. So that is getting reflected. Profit after tax is a function of, in terms of what the overall spread that what we make on the loans, and also the investments that is being held in the book. So we do M2M basis the standard accounting practices. We've been fairly conservative about it, and the reason for the slight volatility on the profit after tax is on account of M2M valuations of the investments that we have on the NBFC side. In terms of capital adequacy ratio, we've always been about 20%. I think marginalized small dip in 23 on account of aggressive build-up. So that's how it was the case. So it was a short blip then, but consistently we've been about 20%. So that's broadly our journey. These are just top of the line numbers. I'm sure the detailing is there in information memorandum. If you have any further queries, we can take it at the fag end in the Q&A section. This is about our security-wise composition, which we have already kind of touched upon. 91% book is fully collateralized, which is about almost, as I said, almost 2.5, 3 times cover that we have for any collateral which is being posted. In terms of unsecured side, as I said, we've been very, very prudent and selective. And that's the reason, if you look at this book is fairly consistent. It's not seen those kind of aggressive growth trajectory, what we have done on the secured line. So broadly, these are largely the numbers. I don't foresee that the unsecured loan book will grow exponentially. It has always been in line with the overall growth of the overall loan book. In terms of products, as I said, the focus is on loans against securities. Almost 85% of our book is in that class, which is loan against security. About 5-6% is against property, and balance unsecured loans. This is a very important slide for any NBFC business, and we have seen that there are 2 ways for any financial services to operate. Either you attract retail public deposits, or you have to have a judicious mix of various possible options from an NBFC point of view, because we are not public deposit taking NBFC. So what we have done, which was we have diversified ourselves in the last 18 months. What we were largely dependent about 5 years back only on commercial papers plus our own net worth. In last 3 years, we moved this entire composition to either the equity linked notes. So that's one, net worth, and some small portion to CP. And which further got diversified in last 18 months through bank lines. Today, all the top banks from State Bank of India to the leading private sector banks, they have funding facility to us that is in excess of about 1,000 odd crores. Second, this public issue, which is very unique. We are the first wholesale NBFC to do a public offering of NCD, and idea is to share our story as well. and which was very well received in tranche one. So almost 1,000 crores, which is about 20%, which is, with this tranche about, say, another 500 odd crores, which is likely to get raised. So almost 1,500 crores would be through medium to long dated debentures, bank lines, and then balance is CP. As CP has always been on a shortened side, and there's been a conscious attempt that we've been being very, very selective in terms of raising money through commercial papers, and it is more about making a long-term liability book, which becomes balanced, which becomes judicious, and also it can absorb any market volatility as well. So that is a big difference, and that brings a lot more stability in terms of our asset book as well, because we are one of those uniquely placed NBFC where most of our loans are getting recycled within a year's time, and our liability composition starts from 18 months to about 36 months on an average basis. And in this proposed offering, we are looking to raise even 10 years money as well. So that is the kind of confidence that we have. However, it comes at a certain cost. But as we have said, we always want to be on conservative side and maintain a positive ALM. So even for a short-term asset side book, we've been building a long-term liability profile for us. Quick about our numbers. So if you look at the entire growth trajectory, I think it is all about a loan company. So that is what is getting reflected, and some of the investments that what we do on an opportunistic basis as well. If you look at in terms of overall our equity capital, again, from 1275 odd crores to our net worth over a period of time, which got added, we are at about 1440 odd crores. And if you look at in terms of debt issuance basis fiscal 24, it's about 5,250 with other borrowings, which is being amply reflected. We will take it on in a subsequent slide as well. But idea is we've been very, very prudent in terms of maintaining a right balance, both for building the loan book and also making sure that there is enough and more depth in terms of our liability profile to support that growth in the loan book as well. I'll just quickly hand over to Charu.
I'll just take you quickly through this through our balance sheet. So basically, our balance sheet is close to 8,000 crores, of which and the 8,000 crores on the asset side, our loan book would be around 6,500 crores odd, and our basic balance would be investment book around 1,500 crores in terms of investments and cash. On the liability side, as Himanshu mentioned, 1450 would be close to our equity, and balance would be debt and borrowing. So debt will, as we have seen in the previous slide, our debt comprises of a bank borrowing, CPs, and long-term instruments. So basically, it's a very simple balance sheet. So with borrowing and equity on the liability side, and our borrowing, our asset book, our loan book of around 6,500 crores and 1,500 crores of investment book. If we take it to the next slide, please. So this is a profit and loss. So if you look at, we have been consistently over 250 crores in profitability from 2022 to 24. We have been steadily growing. Our revenue from operations have been close to 900 crores. Our expense is a very, very, it's all mostly it is an interest cost. It is a very, very asset light model. And hence our profitability for this year has been around 273 crores. I'll hand it over to Himanshu back for the subsequent slides on the management and board.
Thank you, Charu. So again, risk management is heart and soul to any lending business. And whether you are bank or whether you are NBFC or whether you are microfinance, I don't think this thing can be ignored considering the overall volatility and considering the steep curve that we are seeing. An idea is now it is just not about our own local onshore market, but the way the entire market is integrated with the rest of the world. So anything which is happening in Western world impacts us on immediate basis. And there's a reason this entire risk management practice, I think, it goes beyond just the collateral management, which I've already spoken about, that we have a loan management system which can just update the value of collateral on a real-time basis. And we have a client-specific position, be it surplus or deficit, can be known within a lead time of about 5 minutes of say, for example, if it's in mid-afternoon, we'll know with a lead time of 5 minutes. If it's 3:30, end of the prices, that gets refreshed within 5 minutes as well. So this is again courtesy technology, and we have gone beyond that as well. I think, which I said in terms of KYC, in terms of entire client's loan ledger, everything is online. Client can see through, by just having a password around, and they know what exactly is their loan account status as well. In terms of market risk, what is unique to our business is all our loans are being linked to our PLR, which is 361 prime prime PLR. And in case of any change in interest rate scenario, we just change the PLR. And most of these loans have a put call on 3 months basis. So at any given point of time, if client has any desire to pay or to draw additional funds, they can always do that. So this is, I would say, as good as a quasi overdraft facility, which gives the flexibility for us to reprice the loans instead of continuing them at a fixed rate. So that's where it helps in terms of making sure that we respond to the market circumstances. Liquidity risk management, we have amply covered. One, the diversification of entire liability profile, where bank lines, the public issue of NCDs, the equity linked debentures. I think that has made our balance sheet largely, I would say, which was about a few years back dependent on CP, has kind of given that cushion, and today CP's contribution is less than about 20%, which is as good as one time of our net worth only. And idea is going forward also, we want to reduce our dependency on CPs and having a long-term source of funding being tied up. So that's one. Second is what I said is in terms of borrowing long and giving money out for short-dated period. Again, that's a positive ALM. It leads to about 50 to 75 basis points of compromise on the overall profitability of business, but that's a conscious decision that we have taken at our end, that we don't want to carry any market volatility on our balance sheet. Sunny? Again, board, Mr. Narayanan is there from day one. He's been in public life for over 4 decades. Very senior bureaucrat. In his last assignment, he was economic advisor to Prime Minister. He has worked in various ministry, and we dip into his wisdom, and he's been there on various committee as well. So he's quite well entrenched and quite involved in our running our business. Ms. Rekha Warrior, she retired as Chief General Manager with Reserve Bank of India. She been actively involved in terms of policy framework related matters. And again, whatever she contributes, it's always been taking into consideration about central bank's view as well. So we've been very, very fortunate to have her wisdom when it comes to some of these strategic matters. Ms. Revati Ashok, she's been a recent joinee. Again, she was on the board of a couple of listed company. Plus, also prior to taking it easy, she was CFOs with a couple of listed companies in her past assignments. Karan, who's been a founder for 361, he is someone who started the entire wealth management business. He, along with Yatin, both came together from Kotak, where they had a short stint, and they started together this journey in 2008, just after collapse of Lehman. If any of you recollect, I think the times were very different, and wealth management was not something which was spoken very routinely, which is unlike today. I think everybody is aware about what exactly the wealth management business is all about. So they were courageous enough to start this business, and today, in last 16 years, this been the entire journey which I have touched upon in my slide one. Personally, this is I've been in NBFC capital market and private banking business for about 25 years. I've spent time with Citi, Merrill, Morgan, and BNP Paribas in the past, and from day one of NBFC business with 361 Prime. So this is about the core team, which is there. Niraj, who just missed out today's session because he has something important coming up. He's been with the business from day one, and he looks at the entire credit risk plus the entire operations piece. So he has a complete handle with regards to the entire backend part is concerned. Sanjay, who's the CFO of the business, again comes with very strong CV value, almost 25 years of work experience as well. He has a long stint with L&T as a group and Reliance in the past as well. Charu, who just was there for a short while during this presentation as well. She's been with us for over 2 years now. She has spent time with Piramal in the past and L&T as well. So she looks after the entire the lending piece. And today, in case if we are sound and robust on the entire liability franchise, it's a lot credit to her in terms of diversifying and putting some of those strong discipline and checks and balances. So that's about her. Then we have head of operations Rakesh. He's been there for 15 years with 361 as a group, and with NBFC from day one. We have a CRO Amrendra Tembe, over 20 years of work experience. He has long stint across all the multinationals, including a short stint with the BNP at Hong Kong office. And there are the company secretaries and other functions, which I'm not dwelling into it. All are well experienced and they've been well exposed with the overall NBFC business as a whole. Sunny. Quick about offering, where I'll again turn it to Charu. Let me just go on mute, please.
Yeah, hi. So we'll just take you through the tranche 2 terms of the issue. So these are secured, rated, redeemable, non-convertible debentures. These are rated AA, stable by both CRISIL and ICRA. So these are dual rated. This public issue is dual rated. It is eligible for investments by insurance agencies and PFs as well. The issue opens tomorrow, which is Friday, 24th of May, and it closes on 6th of June. This is registrar to the issue is Lincoln Time. It is to be listed on BSC. The issue face value of the issue per NCD is 1,000 rupees, and the minimum application size will be 10,000 rupees. Thereafter, we can apply in one NCD, which is 1,000 rupees thereafter. It will be on dematerialized form, first come, first serve basis. The allocation to all the 4 categories, which is the QIB, corporate, HNI, and retail, is 25% each. If you go to the next slide, I can show you the, yeah. So we have come out with all the tenors from 18 months to 10 years with both monthly and annual coupon options. So we have 18 months, 24 months, 36 months, 5 years, and 10 years. Coupon ranging from 922 XIRR, sorry, not coupon, so XIRR ranging from 922 to 986 from between 18 months to 10 year. These are secured debentures, secured against the receivable of the company, and the asset cover is, or the security cover is 1.05. So our lead managers are, as mentioned earlier by Sunny, are AK Trust and IFL Securities. Registrars is Lincoln Time. Rating agencies are CRISIL and ICRA. Beacon is our debenture trustees, and Singhi and Company have been our stat auditors.
Investments in debt securities, municipal debt securities, securitized debt instruments are subject to risks including delay and/or default in payment. Read all the offer-related documents carefully.